everyone, welcome back to Corporate Decoder. Today we're diving into Celcuity's latest financial report, a report so exciting it's almost like watching paint dry but with numbers. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss this and other videos. Octev and Celcuity, a company trying to create new cancer treatments, just released their forward report, and the big picture is simple. They're burning through cash but still pushing forward with their drug development. Let's break down what's really happening. First, a quick reminder about Celcuity. They don't have any products on the market yet. They're betting everything on Gedatolisib, a drug designed to treat multiple kinds of solid tumors. Think of it as a Swiss Army knife hoping to take on a bunch of different cancers. They have a couple of phase 3 clinical trials going on right now, named Victoria 1 and Victoria 2. Now, this report is a condensed version, so it doesn't have all the details you'd find in their yearly report. It's like getting the movie trailer instead of the full film. We'll focus on what matters most, mainly the financials. Let's jump into the money. Here's their balance sheet showing what they own and what they owe. On the assets side, we see about 16.5 million in cash and a whopping 189 million in short-term investments. That sounds like a lot of money, and it is, but this is what's left after expenses. They have total 1.8 is. But this is what's left after expenses. They have total assets about 21.18 million. On the liability side, they showed about 98 million. That leaves them with about 86.6 million in total stockholder equity, also called net worth. The same number was 115 million. That means companies' net worth decreased in about 3 months. And this is something you want to pay attention to. Now, let's look at how they actually performed and how much money they lost during the last 3 months. Here's the key number. There was almost $37 million. Syrup was 21 million, so the loss increased significantly. To understand why, we have to look at expenses. Excesses were a huge 32 million, which is much more than the 20 million of last year. Excesses were about 4 million. Also increased a lot to about 3.1 million, mainly because they took out new funding. The company claims the main reason for that net loss, its increased investment into. That translates to losing 86 cents for every share. That's a lot of red ink. The cash flow statement shows where the cash is going. They are about 36 million. It's good that they have invested by about 24 million. However, they have about 5 million. So net, they are burning cash, as you can see here. This is where they tell you everything that could go wrong. Not all of it is worth spending time on. The risk is the usual for biotech companies. There can be significant changes and variations on clinical trial costs. Also, sowing the biotechnology is a huge risk and should be in the back of every investor's mind. They give a lot of stock to their employees as part of their pay, which they account for. These are non-cash expenses unless people sell them. Sories tells us how many shares could be added if options and warrants were exercised. That could further dilute current shareholder value. This is quite standard for companies of this kind. Good thing is they are very conservative, and all of investments are for their clinical trials, totaling almost 7 million. Also, they have operating leases as well for corporate spaces. Most common stock activity consisted of about 700,000 warrants being exercised, which is quite significant. We have to see how they account for stock-based compensation to their employees, which looks high. For about 4.3 million options, that will translate to a lot of money expense in the future. Their general admin and R&D departments both use a lot of share-based compensation, as you can see. Finally, they show their debt. They show they owe almost 100 million under a loan agreement. As for most of these loans, there will be significant fees involved. One important thing we didn't see in this report, any indication that the officers or directors of the company had adopted or terminated a trading plan. So people are betting long Quadrant. So after all of that, here's my take on Celcuity. Their major strength is a management team betting their chips on the drug Gedatolisib. But the problem here is that they continue to burn cash without a clear path to profitability right now. To put it bluntly, Celcuity's betting big, but they have to get Gedatolisib across the finish line, or they may see bad times. They are betting heavily on 2 phase 3 trials named Victoria, which based on top-line data will be completed in about 6 months. To get that big reward, you have to take big risks. Alright, that's our breakdown of Celcuity's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.